Today we will talk about child life insurance. What is it and should you buy it? Child insurance can help secure your kids' future insurability. Here is how to decide if it is right for your family or not. We all want our kids to live long, healthy lives, which is why child life insurance may not feel like a top priority. It is worth considering though, as it can look in low rates and act as an investment vehicle for your children. What is actually child life insurance? Child life insurance covers the life of a minor and is typically purchased by a parent, guardian, or grandfather or grandparent. In general, these policies are whole life products, a type of permanent life insurance. This means coverage lasts for the child's entire life as long as the premiums are paid. Coverage amounts tends to be low, often under $50,000, and premiums are locked in, meaning they would not go up. The average annual premium for a $25,000 policy on a newborn is $150, according to Courtesy, a life insurance brokerage. One of the benefits of whole life insurance is that it builds cash value. The policy investments components, a portion of the premium is paid into the account which grows over time. At certain ages, such as 21, the child can take ownership of the policy and continue coverage, buy more, or cancel the policy altogether. Now we will talk about pros and cons of life insurance for kids. When deciding if the child life insurance is right for you, consider these three popular features. Number one is guarantee future insurability. Child life insurance policies typically include or offer a guaranteed purchase option. This means the child can buy additional coverage without completing a life insurance medical exam. The additional coverage available varies among policies, and the ability to buy more may be restricted to certain ages or life events like marriage. Pros: this feature can be useful if the child develops a chronic health conditions such as diabetes or chooses a risky career like becoming a firefighter. People with health problems or hazardous jobs typically pay much more than the average cost of life insurance. Cons: healthy applicants in their 20s are likely to secure competitive rates. So, if you think your child would not need to find life insurance with the pre existing conditions, a child life policy may not be necessary. Point number two is acts as an investment vehicle for your child. You can withdraw money from the cash value account or borrow against it. When the child reaches adulthood, they can surrender the policy and receive the funds in full. Pros: money can cover costs like future fees, school fees, or a down payment on your child's first home. It also grows tax deferred, meaning you don't pay taxes on the gains unless until you withdraw the cash. And the cons are life insurance cash value accounts rely on your paying premiums and can take time to grow. If setting up an investment for your children is your main goal, you may not want to consider other types of investments first. Number three is covers costs if the worst were to happen. Losing a child is extremely painful and you may incur unexpected costs. Child life insurance policies pay out a lump sum in the event of a death as long as the premiums are paid. Pros: the payout can be used for expenses like burial costs or grief counseling. It can also help cover the costs of running a business if you are the owner and need to take him off. Cons are it is relatively uncommon for a child to die in the US. Therefore, the risk of going without coverage may not be outweighed the cost of the policy. You must listen before you buy. Assess your budget and look at your own life insurance needs before buying a policy for your kid. In general, your own life insurance is more important than your child's. because it can help cover the family's living costs or other expenses if you were to die. You may not consider adding a child term life insurance rider to your own policy instead of purchasing separate coverage for your children. In some cases, you can convert child riders to permanent coverage when the term is complete. Not all insurers offers these riders and coverage amounts may be limited. Alternatively, if you have group life insurance through your work, you may have the option to buy supplemental life insurance for a child or a spouse. However, group life plans are typically tied to your employment, which means if you leave your job, you may lose your coverage.